Hello, my name is Steve Bigelow with the Candlestick Forum. The market is starting to get a little bit tentative. We can see in the Dow that over the last few days, we've had dojis right here at this resistance level in the overbought area. You can see how they sell it off each day and then bring it back up. But that's starting to tell you there's some profit taking starting in here. So you've got doji, hanging man type signals. If they start trading lower, that tells you the bulls have finally run out of steam. There should be some good short positions occurring. We can also see the same thing. Yesterday, the NASDAQ opened higher and traded lower, but came back up. Today, it traded slightly higher, but still very indecisive. Again, stochastics up here in the overbought area. This is providing some specific bullish trade situations. Today, there was an announcement on HYLN, one of the electric vehicle sector stocks. So this is where we use our rare research to see why this occurred. It was something to do with their batteries. Rare research is basically research analysis, reverse engineering, especially in a strong sector like the electric vehicles where somebody's technology could put them out in the forefront for quite a while until new technology catches up. This allows us to identify which stocks to be moving into and what other stocks might be adversely affected by new technology. We're also taking advantage of the downdrafts. Notice the downdraft that occurred in GameStop after the enthusiasm was over, where it hit almost $500 a share, coming from $15. They've started to sell it off, and they're back down here in the below the $50 level. That tells you what happens after the sizzle goes out. So we're looking at the same opportunity in Sava. Big dark cloud. It just closed below the T-line today. If they start pulling the plug on this one, it could move pretty rapidly back down into this area where the gap occurred. So this provides, in these market conditions where it's starting to get a little bit iffy, you want to start looking at as many short situations as you do long situations. Obviously, the patterns are still working. Our recommendation on CAN is still working very nicely. And that's because when you can identify a pattern, like a fry pan bottom, and add all the other specifics to it, like a fry pan bottom that bounced up off the 50, back up above the T-line, gapped up through this level, nice day to day, even when the market was a little bit soggy. Again, the trajectory of a pattern will still usually produce good results, even when the market gets a little bit soft, because the investor buildup is based upon something other than the market direction. Right now, we can see from the announcement this morning that there's not enough chips to help the auto industry. So that tells you these stocks like Micron. Look at the trend kicker signal. Open here, closes here, gaps up and goes the opposite direction. At the same time, producing this J-hook pattern becomes a very strong buy if it breaks out going into wave 3 through this resistance level. This is the indicator that tells you there's new strength coming in. This is the pattern that tells you a J-hook pattern could be setting up. This is what we call 2+2 analysis, when you could add things together to give you much better probabilities of an uptrend. You're going to see that same thing in Taiwan semiconductors and applied material. So there's still lots of opportunities, but they're much more specifically oriented towards specific sectors. So even though the market might start to get weak, you still can have long positions on, as well as some of these short positions that are starting to show good potential to the downside. That'll be it. We'll see you in the chat rooms.